I'm going to be talking to Dale Marshall from Environmental Defense about a new study that came out called Canada's Big Oil Reality Check. Now, he joins us from Glasgow, where he's attending COP26. Welcome to the interview, Dale.
Thanks, Markham.
Now, look, the premise of this study is that we are in a climate crisis. Emissions have to go down, but the big oil companies in Canada, particularly the oil sands companies, are planning to expand production out to 2030. In fact, I think the oil sands is forecast to expand by 650,000 barrels a day, and oil and gas production together 1.4 million barrels of oil equivalent by 2030. And you're arguing that, in fact, that's just incompatible with what we need to be doing on climate.
Well, it is. The International Energy Agency came out with this 1.5 degree scenario, and it essentially said no new investments, no new approvals of oil and gas projects from here on in and all fossil fuels. And so the almost 30% increase in barrel of oil equivalent for the 8 companies that we looked at means that they're wildly out of step with a climate safe future.
Right. So the point, they don't have any climate plans that are not, as your report put it, the bare minimum needed to limit warming to 1.5 C. But I think there's a bigger issue here. Well, I mean, it's part of a bigger issue, and that is Alberta doesn't have a credible climate plan. The oil and gas sector doesn't have a credible climate plan, and it's like it's very scattered, and they have this oil sands pathway to net zero by 2050, but it's all carbon capture and storage. I mean, there doesn't seem to be a real credible strategy and a commitment on the part of the government or the companies to get there.
Yeah, totally. I mean, if you could read their net zero strategy that the 5 oil sands companies put out. I mean, you could read it in about 6 minutes. It has very little credibility. It has no detail. It discusses, the anchor being this CCS trunk line that will capture and carry carbon to a facility for underground storage. The second phase of it, there's a footnote that says, in the second phase, we don't know what it'll be. Maybe it'll be CCS. Maybe it'll be, small modular nuclear. Maybe it'll be hydrogen. We're not sure. So it's quite lacking in detail. And also, they're clearly expecting. I mean, the one theme from that pathway strategy is they want government money. I mean, all over that document is all about government partnerships, and here's what happened in other parts of the world, and this is how governments contributed to their projects. There's more on that than there is on their actual strategy to get to net zero. And the thing that we point out in Canada's Big Oil Reality Check is that dealing with the carbon from production of oil and gas deals with 20 to 30% of the problem. When that oil and gas gets burned, you have the rest of the emissions, the majority of the emissions. So even if there was a credible plan and they could get to net zero, they're still ignoring the vast majority of the problem. And that's not, that doesn't even take in, now we're just talking climate change, we're just talking carbon emissions. It doesn't take into account impacts on the land, these tailings ponds, used, fields, and all of the hundreds of billions possibly in environmental liabilities. So, we argue that the way that we need to move forward is by actually cutting production and moving away from this idea that we can deal with just the emissions from production and that'll be fine.
Yeah, I think it should be pointed out that the oil sands need a growth narrative. Their business model is based on their investors expecting and anticipating that there will be more production this year than there was last year. There's an opportunity for dividends to grow, that sort of thing. And any suggestion of no growth or even cutting production would almost tank their business models. They'd be in big trouble. So I can see why they would have that narrative, but that narrative and their strategies are not compatible with where the governments are going at COP26, nor are they compatible with the federal government's, our own government's climate policies.
And they're completely incompatible with a climate safe future. I mean, essentially what Canada's oil and gas industry has said is it's looked at the science, what the Intergovernmental Panel on Climate Change has shown we need to do in order to limit warming to 1.5 degrees, what the International Energy Agency has said. And they said, we don't care. We're not going to change our business model. We're not going to shift away our investments from producing more and more oil and gas and shifting those investments to areas where there's still growth and there's still opportunities. So this wasn't in the report, but we hear a lot about investments in solar and other other green technologies coming from the oil and gas sector in Canada. At most, and we're not at most, that's 4% of their investments. So clearly they're pouring the vast majority of their investments into a business model that is at odds with us having a secure future and having a healthy community and world to live in. And like that's just not on for, it shouldn't be on for anybody, but certainly not for environmental groups that are trying to avoid catastrophic levels of climate change.
Well, let's look at the big five oil sands companies. So we're talking about Suncor, CNRL, Cenovus, Imperial Oil, and Meg Energy. Out of those five, and they produce probably 75 or 80% of the Canadian oil, only Suncor has got any investments at all outside of oil and gas. So Suncor's got, I think, like 4 wind farms and 3 solar farms, and investments in clean tech companies like Enerchem and LanzaTech, which is a sustainable aviation fuel company. So I wouldn't say that Suncor, compared to Shell or other companies, is leading the way. It's okay. It's sort of a middle of the road compared to other progressive companies internationally, but they are the only one in Canada that's doing that. And the rest of them, their strategy is that it's business as usual, but lower emissions, to if we have to, but only if government pays most of the freight on this one. And I just don't see how, in today's environment and the discussions that are going on at COP26, that's viable. And I understand why you put out the report.
Yeah, I mean, and the Suncor comes out better in one way than other oil and gas companies. You mentioned investments in wind. They also are the only, both them and Exxon, sorry, not Exxon, Shell, both talk about Scope 3. They're the only ones who discuss in any way Scope 3 emissions. And they're the only one that has a target for emission reduction. So to their credit, they've said they're going to reduce emissions by 10 megatons across all 3 scopes. But the plans are incredibly vague, right? So 5 megatons are going to come from essentially things they directly control, the Scope 1 and Scope 2, and 5 megatons from the downstream emissions. And they don't have any plan for the downstream emissions other than to, some hand waving like consumer or something will happen. And so, it's problematic that they talk about Scope 3 emissions, but literally have no strategy to deal with that. And what it means is, if you combine that with a plan to expand production in the next 10 years, that their emissions will, despite this 10 megaton commitment, even if they reach that, even if they're able to figure out those 5 megatons from downstream, their emissions only go down about 2%. Now, that's the leading company in Canada. Canada's targets are 40 to 45% by 2030. If our biggest emitting source, if the best player in the biggest emitting sector can only pledge to reduce its emissions by 2% across all of the scope of its emissions, we're in trouble. We're in trouble as a country, and we're in trouble as a world. And the production cap report that came out, have lost track. I don't know if it's last week or the week before, showed that Canada is planning on expanding oil and gas second in the world. Only the US wants to expand its petroleum sector more than Canada. That's problematic. You know, the fact that we may take up 16% of the remaining carbon budget for a 1.5 degrees pathway is problematic. It's way more than our fair share, and it means that we're imposing costs on the rest of the world.
Let's talk about Suncor a little bit more, because in fairness to Suncor, in their last investor presentation this spring, they said they were, for the next 5 years, up to 2025, they were going to cap production at 800,000 barrels a day and get more value out of lowering their production costs. So in fairness, but we don't know what's going to happen after 2025. I mean, you know, that's still, they haven't indicated there. But at least there is a somewhat different model. And they could probably, if they were prodded by government and the finance community and investors, they could probably accelerate that model and do more, because they certainly have the cash flow these days. The profits is incredibly profitable time for those companies now. So that there at least is a model for moving forward. But the other companies like CNRL and Cenovus have absolutely no interest in that. They none whatsoever. And I think that lack of ambition, that expectation that Canada and the rest of the world will modify its expectations of the oil sands rather than the oil sands having to adapt to the greater ambition that's coming out of COP26. For me, that's a big problem. That's a very entitled kind of approach by the oil companies, and those days are over. And in my opinion, that's this is not the 1980s. We got a climate crisis. And anyway, I'm going on a bit of a rant here because I find the oil sands approach to this is untenable.
It is. And I think, to be honest, I think that you're right, that most companies, like there's a lot of companies, their assessment, like don't even set like reduction targets, don't have climate plans to actually in any way have, set targets. Most of the gas companies have, those companies that focus on gas, focus on intensity improvements. I mean, again, it's not the 80s, right? We're way past the point where we can deal with anything climate related with improving emissions intensity. And it's, again, one of the reasons why we talk about needing a production declines in order to really rein in the impacts from the sector. The fact that there's an emissions cap being proposed, what I've been saying is essentially the Prime Minister has identified the biggest challenge for Canada, and that's the oil and gas sector, but he's come up with the wrong solution. Because I am very worried that this emissions cap ends up being something that is not at all strict, that takes a long time to get put into place. And meanwhile, as I said with the production gap report, more and more investment in new infrastructure that's going to be around for 10 or 20 or 30 years just keeps rolling out for the next 3, 5, 10 years. And if we do that, again, we are losing the opportunity to keep warming, to limit warming to climate safe areas.
Look, Dale, I want to wrap up this interview with an observation, and that is the average carbon intensity of a barrel of oil in the oil sands is 70 kilograms of CO2 equivalent. But that masks a lot of variability because the new projects are much more efficient. They're as low as 37 kilograms of CO2 equivalent. But there are older projects out there that are 200 kilograms of CO2 equivalent or higher. And it may be that we're just going to have to say, look, if you can't fix this, then those really old, inefficient, polluting plants are going to have to go. They're going to have to mothball them, and that's a good place to start to get emissions down within the oil sands. So anyway, we'll leave it at that. Thank you very much, Dale. Really appreciate your insights, and good luck on the rest of COP26.
Thanks a lot. Thanks for your interest, Markham.